So let's see this particular example over here. If you look at this particular trade that I took over here, it is the same thing that I use. Yes, you may not understand fully right now, but yes, it is the same principle. All right, I don't know if you can see my line of neutrality very clear over here. I'm just trying to zoom in, expand the chart for you to see whatever I'm trying to refer to. If you look at this line, I don't know if it's that visible. Okay, let me make it a little bit bold. Let me see. This particular candle over here is a swing, swing high, which acts as my break of structure that I use in the market. Okay, so I marked it out. What did we see happening? Price broke above it, and like we expect, price fall below it again. That is the correction we were expecting to happen. And once that happened, we could see price push back above it again. So you could see the exact place I entered the trade was the closure of this particular candle. All right, at the closure of this particular candle. Once it closed right above, then it has given an indication or a sign that Hey, welcome back everybody. So today we're going to look at something very, very important to us. That is a line of neutrality and behavior of buyers and sellers in the market. All right, these things is very important that you need to grab the concept. And as usual, I'm going to try my best to put it in a very simple day-to-day explanation that you can understand, right? And I believe if you happen to understand this very well, you will know how I take my trades and stuff like that. All right, and I don't want you to miss any part of this lesson, so pay a very close attention. Right, you need to give me that rapid attention because it's very simple. Yeah, it's very simple. If you follow my tutorial so far, you will learn that whatever I talk about over here, they are like some basic stuff, but trust me, these things work like magic. They work like magic. So I wouldn't like you to miss any part of this. I want you to take advantage of every lesson over here. All right, so quickly let's talk about the line of neutrality and the behavior of buyers and sellers in the market. So I was saying the line of neutrality, what is it? All right, I'm just going to draw some over here right away. Okay, so let's have this as our line of neutrality. When we say something is neutral, what comes to your mind? When we say something is neutral, you should understand that something that is neutral, it has no specific direction. And when we come to the line of neutrality in a forex market, it simply means a line beyond which, okay, let me use this word, a line above which a certain action could be taken, and a line below which another action could possibly be taken, right? So having established that fact, let me incorporate the behavior of buyers and sellers into it at once for you to actually understand, right? I'm going to put this over here, and I'm going to also put this over here. So we're going to call one of them the sellers and one of them to be the buyers. So let's say these are the sellers, and let's say these are the buyers. I want to explain this thing very well so that everybody, literally even a kindergarten people, can understand it. I want to just take my time, explain this very, very well. Now, if you go to the market, I don't know whichever market that you have at your place, either Makola, Keitia, Agugbulu, or whatever market that you have right now, listen, pay close attention. Whatever market that you have in your country, pay close attention. Let's use the market you meant to understand this over here. When you go to the markets, two things basically happen in the market: buying and selling. Buying and selling happens in the market. It's basically an exchange, right? If you go to the same market, some people go to sellers, buy the item, then they come back and sell those items to others. So basically you can see that it's something like this, right? It's something like this. Back and forth between buyers and sellers in the market. That's what is happening in the market. So one of these people try to get the items at a lower price, and one of such people also try to sell the item at a higher price. Okay, that is exactly what happens in the market. Now let me just push up a little bit and explain something to you. All right, because I mentioned the fact that one of these people go to the market to get the item at a lower price, and one other try to let that item out at a higher price. In other words, one of them tried to push up the price of the item. So let's take this, let me use this red. All right, so I'm going to label here as businessman or business person, or anyhow you want to call it. All right, so BM for businessman. So who is this particular businessman? This businessman is a person who is transacting. All right, somebody who has established his or her business. Though I'm using a man, so let's just say somebody who has established his business and wants to make profits in the process. So this individual is actually buying and selling at the same time, not literally at the exact time, but he is involved in both buying and selling. So let's see what this individual will be looking out for to do to make profits at the end of the day. Remember the word, to make profits at the end of the day. I mean the phrase, to make profits at the end of the day. What would this particular individual over here be looking out to do? Let's explain that right now. And if you get to understand this, that means your understanding in this whole thing I'm trying to explain is very, very good, and you make the best decision when it comes to forex trading. Don't forget, we will go back to the line of neutrality, but then we have to first understand this whole, back and forth between buyers and sellers in a market. So assuming you've gone to 𝘾𝙍𝘾𝙊 market and Amakola market, whichever one that you've gone to, or whichever market out there that you've gone to, and you are acting as a businessman over here, your main duty is to go and buy something from the market. Then once you bought the item from the market, you then become a seller. You buy the item from the market women. You come back to your shop. Now you want to sell that item to people. What are you going to do? Now let's assume you are this particular individual over here. You are into business, and after all, if you are into business, you want to make profit, right? And the same way, if you're into forex trading, your aim is not to be losing money in a forex trading. Your aim is to make money in a forex trading. So you as a forex trader, you are this particular businessman over here right now. Your aim is to make profit. So this businessman will go to the market, probably to the wholesalers in the market over here. All right, he will get to the wholesalers over here and try to buy the item at a price that is what. So this person going here, all right, don't mind my drawings, okay? So this person is going to approach the sellers in the market over here, probably wholesalers in the market. So once this person approaches them, he will try to buy items from these wholesalers in the market, and his aim is to buy the items at a lower price. Listen, his aim is to buy these items at a lower price. All right, lower price. Okay, let me just add a price to it at once. Lower price. So this businessman, his aim is to buy the item from these sellers in the market at a lower price. Now he's coming back to his own shop. All right, let's say he has his shop over here. So I'm going to label this shop. So he bought the item at a lower price over here. In this case, he is what? A buyer. That's what exactly is happening over here. In this particular aspect, he is a buyer because he's buying the item from these sellers at a lower price. That's the price he aimed to buy it. Now, after buying the item, when he comes back to his shop over here, for him to make profit, he will try to sell the items at what? A higher price. Okay, so as his shop, he is selling it at what? A higher price. And over here, he then becomes what? A seller at this other side. So that's why I said it's like a back and forth between sellers and buyers. All right, so over here, he is now as a seller. So this particular individual is both a buyer and a seller, and that is what most of us do in the forex trading. In forex trading, we both buy and we sell as well. All right, we are both buyers and sellers in a market. So this is something very simple. Just try and follow the diagram and also understand what I'm trying to put out over here. This individual is both a buyer and a seller. So when he goes out to buy, he makes sure what he buy the item at when the price is low. All right, and when he comes back to his shop, he makes sure he sells the item at when the price is high. Now let me use that and go back to the line of neutrality for you all to understand. So let me see what I can do over here. So back to the line of neutrality, we established the fact that what this gentleman over here, when he goes out to buy as a buyer in a market, he expects to buy from somebody who is selling at a lower price, and when he comes back to his shop, he expects to sell at a higher price. So now the line of neutrality is going to help us understand this whole thing right now. So let me push this down a little bit over here. So the line of neutrality is where both buyers and sellers are sitting. So on top of this line, sellers are sitting over here. All right, on top of this line over here, sellers are sitting over here, ready to push the price down. So again, let's use that person. We're going to call him the BM again, businessman. So that businessman is the one on this particular neutral line over here. He is the one on this neutral line. All right, so he is expecting to sell price at the top over here to the down. He is expected to sell, all right, from a higher price. Guys, understand this. When he goes to the market and when he is a buyer, he buys at a lower price. When he comes to his shop over here, he becomes a seller, try to sell the item to other people, and he is selling at what? A higher price. That is the same concept over here. On top over here of a neutral line, it is high. All right, above it, it is high. So what do we expect to happen from there? Above it, we have sellers sitting there what? To push price down. Okay, sellers are sitting there what? To push price down. That is what is happening. Okay, and beneath it, all right, beneath it over here, the buyers are ready to push the price up. Understand this for me, because in the next few seconds I'll be explaining something, and if you don't understand this very well, you would think that the thing is contradicting, but it is not. All right, you would think that it is contradicting, but it is not. So understand this for me. On top over here, we have the sellers trying to sell from a higher price, all right, so that they could make profit. You wouldn't like to go to the markets, buy some item at a higher price, then come to your shop and sell it at a lower price. My friend, you're not going to make money. Okay, you're not going to make money if you do that. So yeah, over here, the sellers are at the top over here, waiting to push price down. So it's basically like, you know, the buyers going to give the market to the sellers. Then the sellers will also bring the market down to the buyers. When they bring it down, it means what? The price becomes lower. And who is the buyer over here? The same BM, the businessman. When the sellers push the price down like this, when the sellers push the price down from the top, then this businessman, the buyer, will have the chance to also take a position. And when he takes a position, what does he do? He becomes a seller, then try to what? To push the price up like this, all right, and sell to others. Okay, and when he push the price up, it goes to where? The sellers. Okay, it goes back to the sellers, and the sellers also push the price down. That is where initially I made mention of this, that what? It's like a back and forth between buyers and sellers. Guys, everything I'm saying over here, they are connected, so pay close attention. All right, So this is the line of neutrality, and that is how the whole thing works. All right, so the sellers are sitting on the top over here to push price down, and the buyers are below over here to push price up, to increase the price of an item. You understand? Yes. Now, what is the whole idea behind the line of neutrality, and how does it work? So you remember I told you like a minute ago, that if you don't pay close attention, I'll be saying something and you think that it is contradicting, but then it is not contradicting. So now let's talk about that particular thing I was referring to. So I'm going to use this particular line over here like this. So let's say this is our line of neutrality again. All right, this is our line of neutrality again. Now, as this line is neutral, meaning we don't know what to do over here for now, the only time we begin to act is when we see something happening. Assuming we have a bullish market, right? We have something like this. Assuming this is what is happening, let's bring it back to the line of neutrality. So it is happening this way. There's what is happening. All right, and then boom, price break above this line of neutrality. All right, it breaks above it. That means what? If price is able to break above this, that means the power of these sellers has gotten weak, meaning they are not able to push the price back down immediately. All right, so there's the sellers at the top over here. They are like the soldiers over there, protecting price from going up. They are trying to prevent price from going further up. They want to sell from that place. That's why they think what? The profit margin is okay. So they want to sell from this particular line, just right above this particular line of neutrality. But then if they are not able to do that and price break above it like this, that is giving an indication. Guys, pay close attention to this word. It's going to help you a lot. This is giving an indication that what? Price wants to go up. Price wants to go up. Indication that what? The buyers from the down over here are pushing price up. All right, are pushing price up. So at this point, something should just click your mind. In terms of Forex, something should just click your mind that, oh, price wants to go up, price wants to buy, so I should be looking for buying opportunities. All right, and if you see this indication, it is not enough. It is not enough for you to jump into a trade. No, you are going to lose money if you do that. All right, what if the indication is something like this? Price shooting down, then boom, it broke below this. What is an indication? It is indicating to you that price wants to keep selling, because the buyers beneath over here, below here, these people over here, they are not able to stop the price from going down too much. They got weakened and sellers were able to push the price through them. Ideally, the sellers were supposed to bring the market to them over here. Then the buyers over here will also buy from a considerably low price to shoot it up, but they were not able to do that. So at this point, the power of buyers in the market got weakened. All right, it got weakened. So price is expected to what? To keep falling. But then this is an indication that what? Price wants to fall. But then you don't have to just jump in because price has given you an indication to fall. You have to wait for further confirmation, right? You have to wait for further confirmation in the market to be able to let these things play out. So yes, I'm giving you both the bullish and the bearish scenario over here. So what do you have to wait for? So let's say this indication happened like this. The next thing you have to wait for is to see what would these sellers try to do. All right, so you expect price to what? To fall back, and this fall back is basically like what? A correction, because the sellers will be like, oh, at least we have to make some profit before you take the price away. So yeah, let's also push the price down a little bit. So once they push price down below this particular level, then you are actually not going to do anything at this point. You are going to stay low. All right, the next thing that you expect before you take action is for price to push up over here. Once price close over here, guy, you are ready to just enter a trade and see wherever price is going to take you. The same thing happened over here. If price is able to push back above this, then later come and close below this, all right, then guy, you are ready to shoot price down. Don't worry, we are going to talk more about this, but for now, just understand it that way. All right, there are so many things. Do I say so many? There are a couple of things surrounding this before you can make good use of it. But basically, this is the whole explanation of how things work. Just few other touches, then you are good to go, right? So let's see this particular example over here. If you look at this particular trade that I took over here, it is the same thing that I use. Yes, you may not understand fully right now, but yes, it is the same principle. All right, I don't know if you can see my line of neutrality very clear over here. I'm just trying to zoom in, expand the chart for you to see whatever I'm trying to refer to. If you look at this line, I don't know if it's that visible. Okay, let me make it a little bit bold. Let me see. Let me make it 0.3. Good. So right now it is bold enough. I think so. I don't know if you can see, so I'm just going to make it more bold. All right. So if you could see, this is my line of neutrality. And the line of neutrality, you should understand that it works with the breakout structure, the BUS that we talked about the last time. That's a swing high. I don't know if you can see here, but then this level over here, this particular candle over here is a swing, swing high, which acts as my breakout structure that I use in the market. Okay, so I marked it out. What did we see happening? Price broke above it. As it broke above it, what happened? You could see price moving up and down over here, and like we expect, price fall below it again. That is the correction we were expecting to happen. For price to come down below it is a correction we expect to happen. And once that correction happens, what is the next thing that we want to see? We want to see price trying to continue the next move. Okay, price want to continue in the original direction that price was shooting up. Okay, price was shooting up, and then price made a correction back below our line of neutrality. All right, and once that happened, we could see price push back above it again. So you could see the exact place I entered the trade was the closure of this particular candle. All right, at the closure of this particular candle. Once it closed right above, then it has given an indication or a sign that our price wants to go further up. That is exactly what you want to see before you enter a trade. All right, that's what you want to see before you enter a trade. So guys, basically this is how the whole thing works. All right, this is how the whole thing works, and in my subsequent video I will explain to you some other things that you need to know, all right, to make sure you understand all these things very well. Okay, yeah, so that for now, that is going to be all. And yes, don't forget to like this video, leave a comment below, and also share this video with your friends. All right, and do what to join the Telegram channel, because a lot is going on over there. All right, a lot is going on over there. Join the Telegram channel, be active over there, and yes, let's make some money from the forex market together. I'll see you in the next one.